As big tech continues to be under pressure, although the NASDAQ was able to pull back to about even at close, but volatility is way up. What are you seeing in markets right now, Michelle?
Well, let's just stick to NASDAQ for a second, because it just 2 weeks ago made a new all-time high and has sold off about 8%. So in terms of the normal correction, 8 to 10% is what you would consider normal. But really what we have to find out from here is this bounce that we saw went right into resistance, which means it rallied right back up to a 50-day moving average, is what it broke yesterday. So at this point now, we are definitely in a caution phase. But what's so interesting about the market is NASDAQ came back on the heels of great reports from a lot of the pandemic darlings that had fallen out of favor and have crashed to new recent multi-month lows. DDD, 3D printing being one, Palantir being another. You had Fastly, Datadog. All of these stocks had more than double-digit gains today. So it'll be interesting to see now what happens from here. Inflation is on the lips of everyone. Interest rates are on watch. The dollar fall is on watch. So if we get some level of stabilization, it's not surprising to see the big tech and the growth stocks start to lead in terms of correction over. And if they fail from here, I would be very cautious.
And Christy, sticking with tech, some of these tech giants are actually calling for more funding for U.S. chip production. Now, remind us, give us a little background on why we are seeing this chip shortage in the first place and what can be done.
Well, obviously you have the global COVID-19, because this pandemic, they disrupted the entire semi shipments as global demand for all things like new mobile devices, PC, data center upgrades surged in response to remote work, online learning, streaming, gaming, and other stay-at-home trends. So consumers also bought more cars than the auto industry expected last spring, which further strained supplies. So basically, then you have every single company that uses chips in production now panic buying in order to shore up stock. And that shortage has then been squeezing capacity and driving up costs of even the cheapest components of nearly all microchips, increasing the prices of all the final products. Now, most chip makers recover quickly, but the entire chip sector still couldn't satisfy the market appetite for these new chips. So you have TSMC fabs already running at over 100% utilization over the past 12 months. They recently announced that they would spend over $100 billion over the next 3 years in order to expand its operations. And then, of course, you have the ongoing tech war that Trump started with China. Most of the semiconductor market still relies on overseas companies like ASML, Taiwan Semis, South Korea Samsung. Because at the root of all this, the squeeze is caused by the underinvestment in the 8-inch chip manufacturing plants that are mostly owned by Asian firms, which have struggled to ramp up production as demand for all these 5G phones and laptops picked up faster than expected. The majority of these chip productions occur in Asia, where major contract manufacturers handle production for hundreds of different chip companies. So it's not a problem that can be fixed overnight. It's going to take a lot of investment dollars, and there's also a hefty lead time. The production of wafers costs tens of billions of dollars, and expanding their capacity can take up to a year.
And Michelle, I want to hit on the last point, and I really only have about 45 seconds for you, so I apologize. But Americans, they're paying down their credit card debt at levels not seen in years. And this sounds like great news, but banks aren't really happy about this. What's going on there?
Well, everybody knows when they haven't paid within 30 days that their interest rate fees, as much as interest rates have gone down in the normal world, in the credit card world, they're still outrageous. And that's how the banks make their money. So naturally, they're not happy about that. However, the banking sector, in terms of sectors in the market, have done really, really well on the heels of some good earnings, optimism, of course, about loan increases, et cetera. So basically what I would say is, even though there's a decline in terms of new credit cards being issued, there's been a rise in terms of offers from credit card companies for you to get and sign up for a new one. So it'll be interesting to see what happens once we get back to some level of normalcy.
Right. Michelle Schneider of MarketGauge.com and Boom Bust co-host Christy, I thank you both.
Thank you, Brett.
Thank you.